Hello, this is Seewing Yee, and my co-host is Mr. Richard Advani from Guaranteed Rate Mortgage. Richard has done thousands of loans for real estate investors all over the U.S. He has real knowledge around what's going on in the housing market. Welcome, Richard. So the remaining few minutes we have, I'm going to give you three scenarios. Currently, we are at 7% mortgage rate. Even with this, because of historic low supplier inventory and still pent up demand, typically we're seeing around 3 to 5 offers, oftentimes more in a lot of different markets. And not only that, we're seeing like 5 to 10% offer above list price, 7%. Now, we don't have a crystal ball, but let's play the game anyway, you and I. At, I believe, a 6% mortgage rate, which could happen sooner or later, who knows? At 6% mortgage rate, I predict we will see 5 to 10 offers per house and offering price higher than the list price. And if we go to 5% mortgage rate, which some predict in the next few years, who knows? But if that would happen, it's not a healthy market. It is unsustainable. What I mean by that is a 5% mortgage rate, we are going to see 10 to 15 to 20 offers per house. And the final listing price above asking could be 10 to 15% more than asking price. That would create a market friendly multiple bid war, not anything like back in 2021. 2021 is an anomaly. So for investors who does not buy right now, when the competition is very low, when in future, when the mortgage rate come down, like the blind leading the blind, just like the herd mentality. The way my definition of herd mentality is the blind leading the blind. You see the animal shows that I watch over the years, and you have a whole bunch of herds, cows or bison, whatever, thousands of them running one direction. Eventually, they don't even see the cliff. The first cow could fall off the cliff 1,000 feet into the ground. They die. And the other 1,000 person follow blindly the blind. Those cows fall off the cliff. They all die. The herd mentality, you become a contrarian investor. You need to go opposite direction. When herd mentality goes one way, a smart, knowledgeable investor, you go the other way. It's contrarian. When there's a crisis, there's an opportunity. So for those of you all sitting on the sidelines, waiting for the perfect time to buy, you're going to run into higher competition, higher multiple offers, and the price will be much higher than it is today. Now, today, you can get ahead of the crowd, get ahead of the curve, buy now, lock in your great rate, lock in your cash flow, and just sit tight and let everybody just follow the herd mentality, and they are, so that's my thought. So 7% rate, 6% rate, 5% rate. What are your thoughts in terms of what I just said?
The first thing that comes to mind is that program that we shared on one of your other webinars, right? Where investors with the specific builders have opportunities to get those 5% rates today on rental properties, right? Don't wait. The second thing is, as we had a webinar on this in the past too, was you're married to the property, you're dating the rate. So why wait till competition's nuts again when rates drop? Buy now at current rates and then refinance when rates do drop, right? But at that point, you're not following the herd, you're not battling the herd, you have already bought your property. Now you're just refinancing to increase the cash flow based on your prudent decision to buy it when things weren't crazy. It's funny because if you look back years and years, we've been having these webinars, and so far, everything that we've talked about has come to fruition, right? And it's not because we're geniuses, it's just we're on the bottom line and we can see through the headlines because we see what's actually happening, right? And years ago, when there was doom and gloom, not a year, up until 3 months ago, right? Everything was doom and gloom. Now everything's like real estate on the rise, rents rise, and everything's positive, right? Once that change happened. But for a while, it was all doom and gloom. It was all BS. It was all nonsense. It was all the opposite of what we're experiencing on the ground lines. And now you see a year later, 8 months later, the media is all like, oh yeah, everything's real estate strong. And Are we going to talk about our last year? You've been wrong until yesterday that you woke up and decided that real estate is actually a good investment and is robust. And nationally, home prices are up year over year from last year. And the national average for a primary home is almost low 400,000s right now. That's the average price across the U.S., right? And people used to think, oh, you go out of state and buy a home for 200,000, 300,000. Those days are gone. That 400,000 taking into account a lot of podunk places, right? Where property, you can still buy homes for 80 grand, 100 grand, 150 grand in decent areas. But if the average is 400,000, that's almost scary that the national average is 400,000. But I think it was only like 4 years ago, the national average is 200,000, right? You know what that I think of right away is not like, oh, price was going up. How much wealth has been created between those two national average statistics, right? The average home price doubled in the U.S. in the last 3 to 5 years. Man, a lot of investors made a lot of money. If you think about it.
Yeah. Richard, you and I have purchased 2 rental properties in the past 12 months. You have purchased a lot more, not only in the past 12 months, you have purchased consistently for the past decade and more. And so you and I and a handful of our investors are buying, even as we speak right now. They have bought last year, they have bought 9 months ago, they have bought 3 years ago. Our handful of investors that you and I guide and consult along the way, you as an investment loan agent, me as a real estate wealth advisor, well, people that bought have no regrets. They are laughing their way to the bank. So, yeah, I know.
Yep.
Newbies out there, whoever they are, it's just it's so sad. Investors are sitting on the sideline. Turnkey mom and pop investors sitting on the sideline. It's absolutely sad that they are just paralyzed by this fear, these negative headlines and all that. Take the plunge, take the first step, or whatever it takes. Never a wrong time to buy investment real estate, especially right now. So as I leave you, I know you're extremely busy. You have a lot of loans to do, rate lock and all that stuff. You're helping a lot of investors to finance their purchases in all 50 states. One quick final, I know you have great thoughts and great inspirational thoughts and share with us. Thank you so much. So one quick final recap before we exit this podcast.
As we always end with, buy real estate and wait. Be conservative with your investment. Important to obviously add some reserves, but if you have money that you're waiting to deploy on investments, you're losing money. You're losing a lot of money versus putting it in an inflation hedging investment like real estate. And if you would have listened to us years and years ago, you would have made a lot of money by now. And be conservative. But yes, I think I know I can confidently say real estate always goes up. And history proves that. Are there going to be cycles in between? Yes. That's why it's important to make smart decisions and smart investments and make sure you have good financial health when you're making these investments. But look, if you're buying it long-term and you're buying it 10 or 15 years, it doesn't matter what happens in 5 years. It doesn't matter what happens in 6 years. The only thing that matters is 15 years from now, when you do plan on exiting the investment, where are things then, right? And things inevitably will be higher with real estate always, as time goes on, just based on inflation. So happy investing all.
Thank you so much, Richard Advani from Guarantee Rate Mortgage. Thank you so much, everyone, for watching. This is Seewing Yee. Have a nice day, and we will see you on the other side. Goodbye.